Michael Saylor is the Mule. Now, why do I say Michael Saylor is the Mule? Fred, what are you talking about with this Mule stuff?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Fred Krueger draws a compelling parallel between Michael Saylor and the Mule from Isaac Asimov's Foundation series. It explores how Saylor's unexpected influence disrupts traditional financial models, much like the Mule's impact on Hari Seldon's psychohistorical predictions. Join us to delve into this intriguing analogy.
There's this new character called the Mule, and basically, this book Foundation talks about this theory of psychohistory, and they're able to predict the future very, very accurately in this thing, except there's this new person, this pivotal character that comes in, and he's an anomaly, and he changes the future, and he's completely impossible to predict what's going on. And I feel like this phenomena of the Mule in Foundation is very similar to the entrance of MicroStrategy. And without giving too much away, I'm going to go into a whole model of what MicroStrategy is doing with MNAV and these converts, and how it's sort of sucking up money that otherwise wouldn't be accounting for. But I want to lay down my thesis, okay? And let me stop by saying, when these ETFs came out, I thought the ETFs were going to play a very dominant role in the future, and that MSTR was going to play a much, much lower role. Why did I think that? Well, the ETFs are so much more efficient, right? You can buy an ETF, and it gives you access to the same thing as a Bitcoin, the same or better level of security than owning a Bitcoin in cold storage. And it does it for almost no money, 20 basis points. And furthermore, it's super tax efficient, because if you, the BlackRock is not sort of paying any capital gains before they pass it back onto you. It's you're getting it there as if there's this perfectly transparent and cheap vessel for owning the underlying shares. So the ETF is such an amazing investment, and it's just generally taking over the entire world, and much more than just Bitcoin.
As 2024 draws to a close, Bitcoin's journey toward the $100,000 milestone has become a focal point for investors and analysts alike. Recent on-chain data reveals that the probability of Bitcoin surpassing this significant threshold by year-end has risen to 45%, up from 34% the previous week. This optimism persists despite a recent price pullback to approximately $92,680, following a peak near $100,000. Nick Forster, founder of the on-chain options decentralized protocol Derive, highlighted the market's bullish sentiment in a November 26 report. He noted a substantial demand for Bitcoin options, particularly call options, which grant the right to purchase Bitcoin at a predetermined price. This trend indicates a strong appetite for potential upside, with 41.3% of contracts being calls and 38.3% puts, suggesting that traders are positioning for both upward movement and downside protection. The options market data further suggests a 68% chance that Bitcoin's price will fluctuate between $81,493 and $115,579 by the end of December. More extreme movements, such as a decline to $68,429 or a surge to $137,645, are considered less likely, each with a 5% probability. These projections underscore the market's anticipation of significant volatility as the year concludes. Despite the prevailing optimism, some analysts caution against potential sharp corrections. Kyung Ju, CEO of CryptoQuant, reminded investors that even during parabolic bull runs, Bitcoin has experienced pullbacks of up to 30%. He referenced the 2021 cycle, where Bitcoin's ascent from $17,000 to $64,000 was punctuated by several such corrections. Chu advised market participants to manage risks prudently and avoid panic selling during local downturns, emphasizing that the current market remains bullish. Similarly, crypto analyst Plank expressed contentment with Bitcoin consolidating in the $90,000 range. He suggested that a period of consolidation at this level could be beneficial for the longevity of the bull market, allowing for a more sustainable growth trajectory. The interplay between bullish sentiment and caution reflects the complex dynamics of the cryptocurrency market. While the increased probability of reaching $100,000 by year-end fuels enthusiasm, the potential for significant corrections serves as a reminder of the inherent volatility in digital asset markets. As December approaches, investors are closely monitoring these developments, balancing optimism with prudent risk management strategies.
So there's this flywheel effect, and the effect of this, the main effect of this is that MSTR has bought, on the order of $15 billion worth of Bitcoin recently. So it started out with, just a single $500 million worth of Bitcoin in 2020. And by buying more and more and more and more and more, and having the Bitcoin price go up and up, it is now sitting on $35 billion worth of Bitcoin, and it's being valued at 3 times that or 2.5 times that, depending on the time of day. So it's being valued at almost $100 billion. But the real question is, can they continue to do this for the next 12 months, 24 months, or even longer? And I would have to say they're in, as long as we are still in a bull market, they will. Because there are still all these people who can't buy Bitcoin. Now, when will that change? Well, it'll change eventually. These laws eventually will change. But they're not going to change all at once. They're not everybody's going to jump in and change in the next 12 months either. So to some extent, some of this pain may go away for people, but others, they still have no option. And I think as long as we're in a bull market, this thing will continue. And this is quite good for MSTR. And this is something that I completely didn't foresee. I'm not sure even Michael Saylor foresaw it, but as it turns out, there's these unexpected consequences, and they can be profound. And what do I think this means for next year? Well, the entire ETF complex took up about $30 billion of new inflows last year, this year to date. It's not a stretch to say that, the MicroStrategy could take $50 billion in next year. If that happens, that alone would probably almost double Bitcoin. And by the way, it's not going to just happen in and of itself. This is going to jumpstart more and more the TradFi ETF engine. And we're not talking at all about reserves or anything else. What I'm trying to say is that we could easily go to $250,000 per Bitcoin with MSTR lighting these brush fires and turning them into forest fires next year. So that's what I mean by this is a little bit like Asimov's Mule. It's a statistical anomaly. It's a flywheel that a lot of people are really having a hard time getting their hands around.
The incoming Trump administration is reportedly planning to expand the Commodity Futures Trading Commission's CFTC authority to oversee a significant portion of the cryptocurrency market, particularly the spot markets for major assets like Bitcoin and Ethereum. This move aims to shift regulatory oversight from the Securities and Exchange Commission, SEC, which has been criticized for its stringent approach under outgoing Chair Gary Gensler. By granting the CFTC jurisdiction over cryptocurrency spot markets, the administration seeks to foster innovation within the digital asset industry through less restrictive regulation. The CFTC, traditionally responsible for the U.S. derivatives market, would thus oversee a market valued at approximately $2.24 trillion, encompassing over 70% of the global cryptocurrency market. Historically, the CFTC has classified digital assets like Bitcoin and Ethereum as commodities, aligning with its regulatory framework. In contrast, the SEC's ambiguous stance has led to uncertainty within the industry. The proposed shift in oversight reflects a strategic effort to streamline regulation and provide clearer guidelines for cryptocurrency exchanges and investors. This development coincides with SEC Chair Gary Gensler's announced resignation, effective on President Trump's inauguration day. Gensler's tenure was marked by a rigorous regulatory approach toward cryptocurrencies, which some industry stakeholders argue stifled innovation. The anticipated policy changes under the new administration suggest a more accommodating environment for digital assets, potentially reshaping the regulatory landscape and influencing the future trajectory of the cryptocurrency market. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.